Hello everyone, and welcome to a brand new video on the channel. Today, we're going to talk about major updates to the US bank collapses, the Silicon Valley Bank bailout by the Fed. Before we get started with the video, don't forget to smash the like button, share the video, and subscribe to the channel. Now let's get started. Content. On Sunday night, US banking regulators enacted emergency steps in response to the failure of Silicon Valley Bank. Among the steps is guaranteeing that depositors at the bankrupt bank have access to all of their funds on Monday morning. The move was announced jointly by Treasury Secretary Janet Yellen, Federal Reserve Chair Jerome Powell, and Federal Deposit Insurance Corporation Chair Martin Gruenberg. Depositors will have access to their funds beginning Monday, March 13. No taxpayer losses related to the settlement of Silicon Valley Bank will be borne, they stated in a statement. Signature Bank was shut down by authorities on Sunday, the second failure in a week. Depositors with a signature will also be paid in full, according to the statement. Rationally, this should be adequate to prevent any contagion from spreading and bringing down other banks, which in the digital era may happen in the blink of an eye, capital economics analyst Paul Ashworth said. But because contagion has always been about irrational fear, we would emphasize that there is no assurance this would succeed. Banks will also be able to borrow virtually unlimited amounts from the Fed for the next year, as long as the loans are matched by safe government securities, preventing financial firms from having to sell a class of investments that have been losing value due to the Fed's own high interest rate policies. This implies that banks will be able to readily access depositors' funds without having to sell government bonds, which have declined in value as interest rates have climbed over the past year. The American people and companies can be certain that their bank deposits will be there when they need them, stated Joe Biden in a statement. On Monday, the president is scheduled to speak on how the United States will retain a resilient financial system. I am steadfastly dedicated to holding those responsible for this disaster completely accountable, and to continuing our efforts to tighten monitoring and regulation of larger banks so that we do not find ourselves in this situation again. The actions occurred after Yellen stated on Sunday that there would be no rescue for Silicon Valley Bank, which failed this week, sparking worries of a financial disaster, but also stating that the Biden administration was working with authorities to assist depositors affected by SVB's failure. Yellen stated that conditions were not comparable to the 2008 financial crisis, when the failure of huge banks threatened to pull the entire financial system down. She also attempted to allay concerns that the failure of a regional bank might have an impact on the $23 trillion U.S. banking system. The American financial system is extraordinarily secure, well-capitalized, and resilient, Yellen said on CBS's Face the Nation. Let me be clear. During the financial crisis, there were investors and owners of major, huge banks that were bailed out. The changes that have been implemented ensure that we will not repeat that mistake. The unexpected demise of the California bank with $212 billion in assets, which were mostly financed by software entrepreneurs, alarmed investors. Its clients include Etsy, Roku, and Vox Media, and its demise has shaken a digital sector already struggling with record layoffs. SVB was taken over by the FDIC on Friday, which protects deposits up to $250,000. According to some estimates, many businesses and individuals might lose more than half of their extra deposits. SVB has been stuck in a dilemma, according to Mark Warner, a Virginia Democrat on the U.S. Senate Banking Committee. Shareholders of SVB should lose their money, according to Warner. Depositors are in a different situation. Yet there are concerns about moral hazard. The risk and financial advising company Kroll stated that it was unlikely that an SVB-style bankruptcy will expand to the big banks. But it cautioned that tiny community banks might face challenges, a danger far greater if uninsured depositors of SVB aren't made whole. After SVB's problems became public, the value of regional banks plummeted. Signature Bank, situated in New York, provides financial services to legal firms. The decision to shutter it was made in light of market occurrences and monitoring market trends, according to regulators. SVB's demise has also impacted other banks such as First Republic Bank, Western Alliance, and PacWest. That's a wrap on the video. I hope you liked it. If you did, let me know by giving it a thumbs up, and do not forget to subscribe. Thanks for watching. See you next time.